Okay, let's start off today, Wednesday, May 13th. So you can see from the email, what we're going to do today is we're going to review QS 1610 together. So QS 1610 is important because it's looking at the investing section of your cash flow statement. Now, you've been given a balance sheet here, okay? That's fine. You could use that balance sheet to create your operating activity section, but we're not focused on that right now. Okay. Again, our focus is on the investing section, and also, again, we're doing these calculations. So, cash paid for purchase of equipment, cash proceeds from equipment sold, change in cash and equivalents. Why is that important? Okay, because again, you're going to use that information to create that investing section. Okay. So, first of all, it says here, what was the cash paid for the purchase of the franchise during 2020? Okay, so franchise fee went from 0 to 20. Okay, let's first of all reconstruct, okay, the transaction. Okay? Now you can do that in a T account, or you can do it in a journal entry format, whatever suits you best. But in this case, where you're comparing one year to the next, I'm looking at a scenario where it might be better to use a T account. Okay, so first of all, okay, we have our T account there, and we have our franchise fee. Okay. So at the beginning of the year, it's 0. So this company must have not even had existed. It can't have existed. Why? Well, maybe it did exist because they have retained earnings, so they must have existed. Now, one example, you might ask, well, how do they have a 0 balance for a franchise fee at December 31st, 19, and then a $20,000 franchise fee in 2020 if it's not their first year of operation? What likely could have happened is this company could have bought another franchise, okay, and the original franchise fee that they have, they amortized it over a yearly basis and it grounded it down to 0. Then they bought another franchise case. That's an example of why that could happen. Okay, so anyways, we end up at 20. So how does a franchise fee go from 0 to 20? Well, one might say, well, this must have been the journal entry. Okay, debit franchise fee, credit cash. If you didn't have any other information, that would be the transaction. But it's not the transaction. Okay? This is wrong. So for A, the cash paid for the purchase of the franchise fee is not $20. Okay? Why? Why is it not 20 bucks? Well, you always have to read the bottom of the balance sheet. Now, I've had this before when I was teaching the modular course. Where did you get this number from? Where did you get this number from? You gotta read. Okay, I can't read for you. That's the part that gets frustrating. Okay, so it says here, equipment was sold during 2020. Okay, fine. Then we purchased equipment for $70 cash. Okay, that's an investment activity. Okay, we're not looking at that yet. We also have a profit in 2020 include depreciation expense of $30. Okay, fine. An amortization expense of $5. So one might ask, well, where's the 30 and where's the 5 go? Okay, and there's also gain on the sale of equipment. Well, that $5 amortization expense, when you see the explanation or the terminology of amortization is used for franchise fee, patents, things like that. So what must have happened was they make the depreciation amortization expense, okay, which is 5, and the credit goes directly against franchise fee. There's no amortization account. Okay. So as a result, this is why this can't be 20. Okay, that A has to be 25 minus 5 equals 20. So again, the franchise fee we must have paid, again, not $20, but $25. Okay. Again, you need to reconstruct your accounts when you're doing the investing section. Okay. That's probably the most difficult part. Okay. And it's really tracking your gains and losses on sales, okay, of investments or equipment, okay, and you really need to be aware of your amortization and depreciation expenses. Okay, so for A, we had purchase of franchise fee. Okay, so and now it doesn't ask this in the question. Okay, but I'm going to go set up our investing section as if we were creating a cash flow statement. Okay. So I'm going to have investing activities. You see that? Yeah, it's not the greatest, but so I'm going to have so 25. So I'm going to put cash paid for franchise. And that'll be $25. Okay. Now again, how do I slide this over? Now, we also have proceeds used to purchase equipment. Okay, so cash proceeds for equipment sold during. So I'll just put proceeds from sale of equipment. Well, we don't know yet. Okay, that's what we're now going to try and figure out. So again, let's put it in a key account. When we're looking at buying and selling equipment, okay, and we have to do a cash flow statement, it's very important to, again, reconstruct and use that key account. Okay? So here's our equipment. Now, if we started with a balance of $265, okay? Now our balance is $260. Okay, fine. We also have to include one more item, our accumulated depreciation. Okay. So with my accumulated depreciation, we start with 90 and we go down to 80. All right. Let's take a look now. What information have we been given? Equipment was sold during 2020. All right, fine. Well, we're going to have to go reconstruct that amount. But it also says equipment was purchased for $70 cash. Okay. So not only that, we're going to have proceeds from the sale of equipment. Now we know we have cash paid for purchase of equipment. Okay, and that'll be 70. So that's given. But we still need to figure out what are the proceeds. Okay. Now again, this is the investing activity section. The question never specifically asked us for this, but I want us to get used to creating the cash flow statement, okay, in the investing activity section. So again, we figured out A. A's 25. What's the cash proceeds? Okay, so we don't know the cash proceeds, but we've been given enough information to calculate this. Okay, how? Okay, well, we have a depreciation expense of 30 bucks. Okay, so 30, because remember, debit depreciation expense, credit accumulated depreciation. Now, and we had a gain on the sale of equipment, 35. So that gain on the sale of equipment is tied into, okay, the investing section. So that's what we're going to have to create now. We're going to have to recreate this journal entry to figure out our proceeds. Okay? So, gain on sale is going to be $35. Okay. Well, we know we sold equipment, so we're going to have to remove that. Our accumulated depreciation, okay, related to that equipment, and then our cash that we received from the sale. Okay. So now we can reconstruct, we can create this journal entry using this information here. So let's look at our equipment. 265 plus 70 is not 260. So we purchased equipment, so there must be an amount here. What is that amount here? Well, remember, back to chapter 9, when you're dealing with the sale of an asset. Okay? So that equipment that we sold for a gain of 35 bucks must have had an original cost of, we'll just go 265 plus 70. That's 335, okay? Whatever 335 minus 260 is the value of that asset. Okay, so 75 bucks. The equipment had a value of $75. Again, reconstructing. Now, what's the depreciation? Again, you need to put it in key account format in order to figure out this stuff. So you go from 90 up to 30. So altogether, that's 120. Well, the difference then you have to have a debit of 40 to get down to the 80, right? So your accumulated depreciation must have been $40. So I'll slide that one over here. Okay. As a result, you fill in the cash to make your. So here we are. 75 plus 35 is 110. Okay, minus 40. Well, the cash proceeds must have been $70. Put that in here as well. So they received $70 for the sale of the equipment, and then they went out and paid $70 for the purchase of new equipment. Okay. So this would be your investing section. You would tally that up, 25. So it would be positive $25. So you'd have a cash outflow of 75 bucks. Minus 70, cash paid is minus 25, and this is plus. So minus 25. Okay. So what that does is that's enough information. That's as hard as it's going to get to calculate the investing activity section. Okay. Again, I can't stress this enough. Recreate the transactions. You're given partial or bits of information. You put in your key account, you put it in your journal entry, or you can do both. That's going to give you all the information that you need to create the investing section. Okay. All right. Now it says for C, what's the change in cash and cash equivalents during 2020? So first of all, A was 25, B was 70, and C. Okay, well, what's the change in cash and cash equivalents? Well, cash and cash equivalents for 2020 are 25 plus 25 minus last year's 5 plus 30. So 50 minus 35 is a $15 change. Okay, so we have a $15 increase. Right? So again, that's a quick review of the investing section. Again, we have time. We're going to do more and more of these questions every day. Now, what I'd like you to do then, first, again, on your own, I wanted you to try QS 1610, and then you look at the example that I did up here. Okay, compare that to your answer key, and then what I'd like you to do is exercise 16.7, again on the board. I want you to do only the operating activity section and the investment activity section. We will review that answer tomorrow. And exercise 16.13, I'd like you to complete the example, or sorry, complete the question using the indirect format. The question says use the direct format, but we're not covering the direct format. Again, I said the direct format usually isn't used in practice. You'll need to create the indirect format. So for 16.13, use the indirect format. All right, that is it for today. If you have any questions, please let me know.